Task 4 talks about adhering to the specific codes of conduct. Task 4 has 14 qualifying criteria. Let's look at Task 4, Qualifying Criteria 5. Explain the disclosures that need to be made by a representative before rendering a financial service. In Task 4, we will cover adherence to the specific codes of conduct. In Qualifying Criteria 5, we will explain the disclosures that needs to be made by a representative before rendering a financial service. Here we show the parties involved, being the FSP, key individuals, representatives, and the client. The representative must make certain disclosure before rendering a financial services to a client. We cover the following sections when dealing with information to be provided and disclosed by a representative to a client. Section 13, subsection 1 of the FASE Act. This covers the qualification of representatives. Section 4 of the Code of Conduct. Information to be provided on the product suppliers to the client. Section 5 of the Code of Conduct. Information to be provided on the FSP to the client. Section 7 of the Code of Conduct. FSP gives advice to the client, they must provide certain information. First, we will look at Section 13, subsection 1. Here we have an FSP that is made up of key individuals who are effectively in charge of and oversee the FSP, and then you have the representatives. The representatives provide and give the financial advice and/or render intermediary services to the clients. The key individuals also are in charge and oversee the work of the representatives. We then have the compliance officer, who is effectively there to watch over and monitor compliance of the FSP with the FASE Act. Let's now specifically look at and focus on the representative. Section 13 of the FASE Act first deals with the representatives and then later deals with the FSP itself. A person may not act as a representative of the FSP unless, before rendering financial services to a client, the representative should have confirmation certified by the FSP that the representative has a signed contract and/or mandate to represent and act on behalf of the FSP. The FSP accepts responsibility and is liable for the activities of the representative within the scope of the contract and/or mandate. A person may not act as a representative of the FSP unless the representative meets the fit and proper requirements. A person may not act as a representative of the FSP if he or she was debarred, unless he or she has complied with the requirements of registrar to be reinstated. Remember that the registrar, commissioner, and authority are interchangeable concepts that all refer to the same body of the FSCA. A person acting as a representative must not render financial services or contract in the name of anyone else other than that of the FSP they are a representative of. Next, we will take a look at Section 4 of the Code of Conduct. The FSP has a product supplier, or also known as the product provider. The product supplier or product provider provides the financial products which the FSP gives advice on to his or her clients. The product supplier or product provider can be a third party as shown, but can also be the FSP itself. So in summary, an FSP could have an external product supplier or product suppliers, as well as also being a product supplier to itself. The FSP gives advice to clients on different products from different product suppliers based on the needs of the client. The FSP therefore must notify the client in writing about relevant information about the product suppliers or product providers within 30 days. So we need to understand what an FSP needs to inform its clients about in order to comply with Section 4 of the Code of Conduct. So we need to make sure our clients know who the product supplier is and their contact details. Therefore, we must provide the client with 1. The product supplier's name. 2. The product supplier's physical address. 3. The product supplier's postal address. And 4. The product supplier's telephone number. This may seem basic, but it is important that it's done, so the client has all the information he or she needs to know, and providing this information can easily be overlooked. Next, it is important that the FSP informs the client of the contractual agreement and relationship with the product supplier. This is so the client is aware of the FSP and the product supplier's relationship. We need to provide the names and contact details of the product supplier's compliance departments. An FSP must communicate to its client any conditions or restrictions that have been imposed by the product supplier with regards to the type of financial products or services that they as the FSP have rendered. All these are important as they provide the client with an understanding of the relationship between the FSP and the product supplier, so that the client can make an informed decision knowing that the FSP and the product suppliers have a relationship and an agreement with each other. Here we see that when there is a financial interest held by the FSP with the product supplier, the FSP must communicate and disclose this fact to the client. If the FSP holds more than 10% of the product supplier's shares directly or indirectly. So when we say directly, that would mean the FSP holds the shares in the product supplier. When we say indirectly, it would mean that we hold the shares in some other way, either through another company or person. It is also important to see that the Code of Conduct extends this to also say or equivalent substantial financial interest. So basically saying that it does not have to be through holding of shares, but if there is a financial interest that is equivalent to holding 10% of the product supplier's shares. The consideration of financial interest also states that if over the past 12 months, the FSP has received more than 30% of its total remuneration from product supplier. These sections are basically there to ensure that the client knows that the FSP has some sort of significant financial interest in the product supplier, so they can at least be aware of that fact when making their decisions. Here is where things can get a bit complicated. Let's role-play this. Now say we are an FSP as well as a product supplier. And as a product supplier, we also have other FSPs selling our products through some sort of contractual relationship and/or agreement. Then it only stands to reason that we as the product supplier would need to provide all the information we have talked about to this contracted FSP so they can communicate it to their client. Here we can see that we have multiple FSPs that are also product suppliers, and have insurance companies that are only product suppliers. An FSP can be giving advice to their clients on products and services from some or all the product suppliers based on the client's need. An FSP can provide and/or render financial services in respect of a choice of financial product suppliers. The FSP must exercise judgment objectively in the interest of the client concerned. This is very important. As we can see from this section, we as the FSP want to inform and notify the client of the FSP's relationships with product suppliers in order to ensure objectivity is maintained and that the interest of the client is always maintained. It is important that the FSP does not make unfair comparisons. So the code states that the FSP may not compare different financial products, product suppliers, product providers, FSPs and/or representatives unless the different characteristics are clearly made. It is important to note that if any comparisons are made, then they cannot and must not be inaccurate, unfair, or unsubstantiated criticism. Next, we will take a look at or focus on Section 5 of the Code of Conduct. Section 5 of the Code of Conduct covers what the FSP must provide and disclose to the client about itself when rendering a financial service. Each of the paragraphs of Section 5 cover the information an FSP must provide and disclose to the client when rendering a financial service. The FSP is to provide the client with full particulars of the information we are going to discuss. If this information is provided verbally, then the FSP must provide it in writing within 30 days. The FSP is to disclose to the client its full business names and trade names, its registration number, its postal and physical address, its telephone numbers, its internet and email address, the names and details of contact persons, and the names and contact details of its compliance officer. The FSP is to provide details of its legal and contractual status and its relationships and agreement with product suppliers. This is to make sure that the FSP makes it clear to the client as to who accepts responsibility of the actions of the FSP and/or representatives in rendering financial services and the extent to which the client must take responsibility. The FSP is to provide names and contact details of its compliance officer and details of its compliance department. And for representatives, the names and contact details of the FSP that the representative is contracted to. The FSP is to provide details of the financial services and financial products it is authorized to render and provide in terms of its license and any conditions or restrictions. The FSP is to disclose if it holds and/or has in place guarantees, professional indemnity or fidelity insurance cover or not. The FSP is to disclose whether a representative is providing and/or rendering financial services under supervision as defined by the definition of fit and proper requirements. Any exemption provided by the registrar allowing the FSP not to disclose any of this information must be disclosed to the client by the FSP. Finally, we look at Section 7 of the Code of Conduct. This section deals with the information that an FSP must provide the client with regards to the financial service they are rendering. When an FSP gives advice to the client, the FSP must disclose and provide certain information relating to the financial services being rendered. The FSP must inform the client of their responsibility in terms of providing accurate information. It is important to remember that the client provides the FSP with certain information in order for the FSP to provide and/or render a financial service. Therefore, it is important that the information received from the client is accurate as well. Otherwise, the FSP cannot give the correct advice or financial service. It is also important to note that an FSP may not request the client to sign any written or printed documents unless all the required information has been included, or sign a blank document. So here we can see that this sets up the relationship between the parties. The client must give accurate information, and the FSP cannot ask the client to sign anything unless the FSP has provided all the required information per Section 7. The FSP must, at the request of the client, provide a statement of account in connection with the financial service rendered to the client. The FSP must provide a client with a statement of identifying and listing financial products still in existence at least annually. These statements must include specific information. We will explore this information a bit later. Let's start with: when the FSP gives advice to the client, they must provide certain information relating to the rendering of the financial service provider. We can divide this information into 3 categories. 1. General explanations. 2. Material information. 3. Specific disclosure. In terms of general explanations, the FSP is to provide the client with reasonable and appropriate general explanations of the nature and material terms of the contract and the transaction. The FSP is to provide full, frank, and honest disclosure of information that is reasonably expected to be disclosed to enable the client to make an informed decision. In terms of material information, the FSP is to provide the client with material contractual information, facts, illustrations, projections, or forecasts that they have. In terms of specific disclosure, Section 7 of the Code of Conduct goes into detail as to what needs to be disclosed. Section 7, paragraph 1c states, the following information must be disclosed at the earliest reasonable opportunity and time. 1. The name, class, or type of financial product. 2. The benefits of the financial product and how they are calculated, accrued, and paid out. 3. The specific information for financial products marked as an investment product or has an investment component. 4. The obligation to the product provider, nature, extent and frequency of monetary obligation and escalation, increases or additions. 5. The obligation to the FSP, nature, extent and frequency of monetary obligation. 6. Any special terms and/or exclusions. 7. Any guaranteed minimum benefits. 8. How accessible will the funds be? 9. Any early termination consequences. 10. Tax implications. 11. The cooling off period. 12. The nature, extent and frequency of payment of commission, fees and/or brokerage fees. 13. Any and all risks associated with the product. 14. The amount of the increase in premiums over the first 5 years, then the basis of the increase over years 6 to 20 years, not exceeding 20 years. Section 7, paragraph 1C, subsection 3 states that specific information for financial products marked as an investment product or has an investment component needs to be provided and disclosed. Therefore, when a financial product has an element of an investment, then there is additional disclosure requirements that need to be provided to the client about the financial product. Let's go through these disclosures. Firstly, the fees being levied in terms of 1. The amount and frequency of the fees. 2. Who receives the fees. 3. The services or purpose of the fees. 4. Fees based on performance, then we must include the frequency, performance measure period, and/or other criteria. And 5. Where the structure of the investment has other underlying financial products, then we must include the manner in which the client can determine the net value of the investment. Next, we need to disclose how the value of the investment is calculated and the details of the underlying of other financial instruments. We need to disclose the details on the past performance of the investment as well. 1. On request of client. 2. Over intervals that are reasonable for type of product. And 3. Include a warning that past performance is not an indicator of future performance. We also need to disclose the details of any rebate on fees passed on to the client. Lastly, any platform fees that are being charged to the client. So now we have covered all the elements relating to when the FSP gives advice to the client. What information the FSP must provide or disclose when rendering the financial service. In terms of specific disclosure, Section 7 of the Code of Conduct goes into detail as to what needs to be disclosed. We will now cover facts that the FSP must tell and inform the client of the client's, responsibility in terms of providing accurate information. It is the client's responsibility to ensure all facts disclosed are accurate and complete. Any information completed and submitted by the FSP, the client must ensure it's accurate and complete. The FSP must inform the client of possible consequences of misrepresentation or non-disclosure. Simply put, the results of giving incorrect and incomplete information. The FSP must supply the client, on request, a copy or record of any transaction requirements within reasonable time. So we have seen that the client needs to ensure that they provide the FSP with accurate information and that any information that is used by the FSP is accurate, because any misrepresentation or non-disclosure could have an adverse effect on the advice given and/or provided. Next, we cover the fact that an FSP must provide a client with a statement of identifying, listing, and mentioning products that are still in existence at least annually. This statement must include specific information. This specific information is obligations, the ongoing monetary obligations of the client. Benefits, the main benefits provided by the product. Value of the investment, if any. Where a product has been identified as an investment or has an investment component, then the net value of that investment to the client must be disclosed. Commissions and fees. Any ongoing incentives, commissions, fees, and brokerage fees payable to the provider must be disclosed. This statement need not be provided where the client is aware or should be aware that the FSP does not render or has stopped rendering ongoing financial services in respect of the products concerned. We have now covered all of Section 7, dealing with the information that the FSP must provide the client with regards to the rendering of the financial service. Note that this section is long with a lot of details, so make sure you go through it and understand all the requirements laid out. We have now covered all the sections relating to disclosures that need to be made by a representative before rendering financial services. We will go through some questions to test the concepts you have learned. Question 1. ABC Insurance, an FSP, is selling a product for XYZ product supplier. Who needs to make the necessary disclosures about the product supplier? A. No disclosure is needed. B. Both parties. C. ABC Insurance. D. XYZ product supplier. You can pause the video here if you need a few seconds to think about the answer. The correct answer is option C. ABC Insurance, as an FSP, would need to do the necessary disclosure to the client. Question 2. How many shares must an FSP have in a product supplier, which would require no disclosure? A. Any amount of shares. B. 6%. C. 12.5%. D. 25%. E. 30%. Pause the video here if you need a few seconds to think about it. The answer is B. If the FSP holds more than 10% shares in the product supplier or product provider, then they would need to disclose this fact. Therefore, anything less, as in the 6%, would not require disclosure. Question 3. The FAIRS Act states that Jacob, a representative, must offer Janet, the client, a product that matches her specific needs. Choose one statement below that best describes the aspects that need to be considered before proposing a product to Janet. A. Establish Janet's purpose and knowledge of the investment. B. Establish the amount of additional income Janet has to meet her financial goals. C. establish Janet's experience and financial know-how. D. Establish Janet's objective, financial background, and financial knowledge and experience. Again, pause the video if you need to read the question again and think about the answer. The answer is option D. Jacob should establish Janet's objective, financial background, and financial knowledge and experience. Question 4. The Code of Conduct makes it clear that Jacob needs to do and conduct a profile assessment and financial needs analysis of a client before offering and/or giving advice to Janet. Choose the correct statement below. A. Obtain information from Janet and keep records of advice given. B. Jacob to base his advice on Janet's financial situation and needs. C. Act honestly and ethically in all dealings with clients. D. All of the above. Pause the video here and read through the question and decide on your answer. The answer is option D, being all the statements are correct. So let's go through a final overview of what has been covered. We covered all the sections relating to disclosures that need to be made by a representative before rendering a financial service. Then we looked at what fit and proper requirements the representative must meet before acting as a representative of an FSP. Then we looked at the requirements around the disclosure to be provided to the client about the product supplier and product provider. Then we looked at the information about the FSP that needs to be disclosed to the client. Lastly, we looked at the information that must be disclosed to the client when giving advice. We hope you enjoyed the video and learned a lot. Please make sure to check out our other RE videos.